Hey, good morning. Let's go over today's trade plan. So in the overnight session, responsive buyers were active for the most part at the 39 support, and we saw a pretty decent bounce off of that area. Heading into the open, we have pre-market resistance at 48 to 50, and holding below that zone would tell us that the sell side is still dominant. And then how ES responds to 44 quarter and the 38 to 40 is going to help us establish our intraday bias. Because even though we had a pretty strong move from 73.75 all the way down into 44 quarter yesterday, and then it extended down into 38 in the overnight session, the market also moved too far too quickly. So it failed on the breakout attempt, but then it went straight line down to the recent lows. So it was very exhausted, and that's why we've seen this bounce here in the overnight session. Looking at the econ calendar, there's not really much happening today, and then we have the non-farm payroll, the employment report due tomorrow. So today, the market may just balance within a range. So off the open, we know that we have some short-term resistance here at 48 to 50, and a breakout above that area would bring 53 to 55 into play. That's an area where sell side can be active, but we will have to gauge how the market is heading higher, and we'll have to gauge the quality of the move, because 53 to 55 is valid resistance, but it doesn't necessarily have to be a failure spot, because our short-term bias is still neutral, because we are still technically trading within the recent range. And a breakout above 48 to 50 on high momentum and broad market strength could take us beyond 53 to 55. Again, that's something we will have to gauge in real time, and 53 to 55 could be potentially a short setup on first test. It just depends on the level of momentum we're seeing and where the other markets happen to be at that time. Beyond that, we have resistance at the 59 high volume node at 60.75, and then we have resistance at 62.5 to 65, pretty high odds area for responsive sellers to be active, and that's also an area that has potential to cap the upside on the day time frame as we head into tomorrow's NFP report. On the downside, below 44 quarter, the market can retest 38 to 40, and that's still a zone where responsive buyers can defend, but we will have to gauge the market situation in real time and see how the market is approaching it and the level of weakness we're seeing across the board to determine whether it's still worthwhile to fade 38 to 40 and to go long at 38 to 40. In the event of a continuation move lower, responsive buyers can still be active at 31.75 to 33.75 support, so that's still a potential long area. Below that, we have support at 28, and 23.75 to 25.75 is a high odds support zone for responsive buyers to be active, and then 16.75 to 19.75 marks the recent low. It would also be a range extreme. It's unlikely that the market would get there on the day time frame today, but in the event that it does, responsive buyers can defend that area as well. So the overall expectation is for the market to balance within a range, and off the open, we're going to be determining where that range might end up being. So if we break out to the upside, perhaps sellers are active at 53.55, maybe they step in at the 59 HVN, and then we start balancing in a range. In the event that the market fails at pre-market resistance or initial resistance, the market can expand the range then to the downside, test yesterday's low, maybe even go all the way down to 38 to 40, and then we start balancing again. Or if we're seeing a lot of heavier liquidation in the other markets and excess weakness on the day time frame, then the door would be open to test 31.75 to 33.75. But like I said, our short-term bias is going to continue to be neutral. So we're not going to be overly bearish or bullish today. Open to setups on both sides. Now, given that the short-term bias is neutral and we'd like to get good trade location on all the setups, and we're currently trading at short-term resistance, if the market breaks out and we're not able to get good location on the longs, then the focus will by default be more so on shorting the resistance areas. But it's not just blindly shorting at resistance. We still have to assess the real-time context, because right now, neither side is firmly in control. We are still trading within the recent range. If you look at the last several days, you can see that the market established a range. We tried breaking out, failed, went all the way down to the bottom of the balance, found responsive buyers there. So right now, the overall bias is going to continue to be fairly neutral. So those are the main ideas heading into the open. Let's see how the market responds to 48 to 50. That'll provide a bit of a clue on the very short-term bias right off the open, and we'll take it from there.